Hi everyone, it's time for another preview of the week ahead in Forex and financial markets. And since the Swiss National Bank meeting is this week, I thought it a good time to look at the Euro-Swiss franc currency cross, which I think could be on the cusp of a big move. And of course, I will run through the week's economic calendar. GKFX Prime presents the week ahead. So looking at the weekly chart, we see the big slump in from the SMB shock in 2015. Since then, a new long-term support formed at 1.06. Euro-Swiss dropped briefly below that to 1.05 last year, where it formed a bottom and rallied back to 1.115 this year. On the daily chart, we can see the price has dipped back to 1.10. If 1.10 gives way, we could be looking at another drop back to 1.06. However, the break of the downsloping trend line suggests we could see further upside with resistance from the 61.8% Fibonacci up near 1.14. By the way, if you're finding this useful, please do me a big favor and smash that like button, and the YouTube algorithm will make sure more people see the video. Okay, so let's switch gears to the economic calendar for a moment. It's the interest rate decision from the People's Bank of China on Monday. Tuesday we have UK unemployment data through January, as well as a speech from Bank of England Governor Bailey. Wednesday is UK CPI for February, and then preliminary March PMIs from Europe, the UK and the US, as well as durable goods orders. Thursday we have the Swiss National Bank meeting, and Friday is UK retail sales and Germany IFO data. So there are a lot of cross-forex pairs, and I couldn't possibly cover all of them in my weekly videos. But the Euro-Swiss pair is, I think, one of the more interesting and relevant ones. On the one hand, the Swiss franc represents a haven asset because it is the currency of Switzerland, a historically neutral country and safe place to keep your money. And then the other side is the euro, the currency of the Eurozone, which is very cyclical and tends to do well if global growth is picking up. We also have the very accommodative monetary policies from both countries. The ECB announced this month it will front-load asset purchases in its PEP program, creating an extra supply of euros, which puts downward pressure on the euro price. Then we have the SMB, which is intervening directly into currency markets by selling francs and buying euros. The SMB has two issues to address heading into this week's meeting. One is how to combat the more aggressive asset purchases by the ECB, and two is what to do about rising bond yields in Switzerland. If the ECB is acting to hold down yields in Europe, but the SMB does nothing, it will make interest rates in Switzerland relatively more attractive. All else being equal, that would be negative for the Euro-Swiss pair. But, of course, all else is not equal. And the euro could continue to trend higher as investors move out of haven trades in anticipation of higher global growth this year. One curveball to look out for would be if the SNB were to implement or even mention yield curve control as a policy tool. That would likely be Swiss franc negative, so euro Swiss positive. Right, thanks everyone, good luck trading this week, and make sure to subscribe so you don't miss the next episode of the week ahead.